Hello? Okay, so oh,
Hello, everyone, and welcome to another backtesting session with Ben and Roman. Of course, with me, I have Roman. Roman, how you doing?
hey, I'm doing good. How are you?
Yeah, I'm doing good as well. It's a little bit different because we normally had the backtesting session on Tuesday, but my wife is very, very, very much pregnant, and we needed to go for a checkup. So that's where I was. So today we're gonna do the backtest session. Anyway, so yeah, what will you have me backtest today?
Yeah, so you have this in title. It's TAO.
Oh yes, TAO. Let's see, TAO on futures. Oh, I'm getting good luck wishes from Martin. I don't know if you already know TAO or if it's like if you know something that I don't, but let's see.
Yes, it was the November 1st, 2025.
From November. And we're doing which combination of time frames?
4 hour, as always.
4 hour, as always. Well, last week we did 1 day, right? Daily 1 hour.
So. Yeah, but I mean, yeah, as usual. Yeah.
The usual is that. Yeah. Okay. So for the people that are new, we are going to do a backtest in Altrady using the smart money concept, trying to see if we can find a winning set of positions in this time frame using the actual smart money concept strategy. If you're not familiar with the smart money concept strategy, you can watch this video, no problem. You'll learn a lot as we explain as we go along. But if you want to see more of that, then I would suggest to go over to altrady.com/academy and click on the on the smart money concept course and follow from the beginning there. Martin is asking when I'm due. Well, I'm due every day, but my wife is end of March. So yeah. Yeah, so that's that. And let's get started with the backtesting session. So normally what we do is we start with the highest time frame that we can possibly get, which is the monthly. And 9 out of 10 times, there's only a few candles as the monthly time frame is so large that we just don't have enough candles. The markets usually don't exist for that long. But we start there anyway. So let's start with marking off a nice all-time high right here. Are we going to see that anytime soon? Maybe. Who knows? I don't know. Oh, this is October 25. We all know what happened in October. Was that this one?
Yeah, that was that.
Okay. Oh, Dimitro is pointing something out. Yes, I'm not in scalping mode today. Yeah. Let's see. We're in backtest mode. You're right. Thank you for pointing that out. Yeah, so we're on the monthly high time frame. Do we see any fair value gaps? No. Yeah, we have this low, but as we all know, that was kind of crazy. It did sweep these liquidity levels, so that's nice. Yeah, not much to do otherwise on the monthly, right? We're here with these, but they're already taken as well.
This level is interesting, yeah.
Yeah, but it's taken.
Yeah, like these two levels being taken, so it's might be crucial. I don't know yet, but
yeah, it could be that that's like a monthly liquidity sweep that we get, which it was. And then maybe we could see a correction to the downside, like usually with these candles. And we saw that on many, many markets where the price will then actually start to take this up because there's liquidity here as well, right? So candles like this are huge magnets for the price to move there.
Yeah.
And yeah, obviously, if we're backtesting November, December, January, we kind of have a feeling of what it's going to do. But I'm trying to be unbiased and trying not to keep that in mind too much. But obviously, we know where we are. Let's switch to the weekly. So we have our high time frame analysis on the monthly done. Now we can move to the lower one where, well, we can mark this one. We already had this one, so let me just draw that with a target like so, which we can check off because it was touched. Yeah, nice liquidity build up here as well. We'll probably see that on lower time frames. This fair value gap we just fulfilled. With that one, this candle was just a monster candle. Not much we can do with that. I saw this fair value gap, but it was taken. Liquidity taken. Yeah. So not that much on this one. Again, it's the same on the monthly. It just took out this this liquidity on a high time frame. So reversal is possible and likely, so that it might take out these, that it might touch these levels again, or even this level again, or even this level.
Yeah, so what would be the first target for the reversal if it goes down?
Yeah, it's difficult with this candle.
Yeah.
But I see a fair value gap right here.
Yeah.
So we can draw that one. And that is a high time frame bullish fair value gap. And we can set that to a weekly fair value gap.
Yeah. And also this one, we can see that it has been touched a couple of times. But yeah, no strong reaction from it. I mean,
yeah, the reaction on this candle is the candle itself. It had nothing to do with the fair value gap.
Yeah, but yeah, so it might provide some resistance in the future, or support, I would say, but it might not as well. So it might be another point of interest as well.
So you say to drag it out a little bit.
Yeah. So what I noticed, so after these candles, is what we discussed a couple of times already, is that sometimes you just want to ignore them. Even though they took out liquidity, and like quite substantial liquidity from 2 years ago, sometimes it might be better to just ignore it.
Yeah. I hear what you're saying. Okay, well, we've got it marked, and we'll just move to the daily. So we're making our way through from the high time frame. We're marking our points of interest, so that we know what we're looking for, and we try to build an understanding of where the price is going to move towards in the next candles. Okay, so on the daily, it's becoming more clear that this was a nice liquidity sweep, because it's even on the daily, it's just a sweep, didn't close above it. So that's still something to be mindful of. We saw that this was probably the formation of the fair value gap. What else do I see? This fair value gap is still there. It's not on the daily. It had been touched, and there was a strong reaction of this. High time frame bullish fair value gap, but then a daily. Okay. And it also like collides with the weekly one. But there was a strong reaction of it, and there might have been a trade there.
Yeah, like the only problem I see here is that it didn't break the swing high right away after the test of the fair value gap. So it had to go for another touch of the fair value gap.
Yeah, but that could have been your entry, right?
Yeah.
I don't know. Yeah, we'll see. We're trading on the 4-hour 15 anyway, so it doesn't matter that much. What we do see here was this fair value gap was ignored, but that was just ignored when it was retouched. So the other one was stronger indeed. And there was a new fair value gap that became the inverse one. That's the bearish one. High time frame bearish. And that was also completely ignored and just broken through. What else do we see? Yeah, this liquidity right here. Lots of liquidity here. So these will be nice targets if the price continues to go down. Or reverses, I should say. It's not continuing to go down. Okay. Did I miss any points? Maybe the high points.
Yeah, the rest looks good.
There's a nice swing point here. Let's go to 4 hours. On the 4 hours, as that's where we're trading, we can add the smart money concept indicator by all trading. It's configured to 4 hours. Makes it easier so we don't have to draw all the points ourselves. Okay, so we see some fair value gaps right here. So there's a high probability that if it continues to go up, we might see it taken out here first. So given this situation, everything is looking bullish, apart from that we have to take note that we just took out a high time frame liquidity. That's the only thing that we need to be mindful of, right?
Yeah. So it's like really important target, and it's really hard to make a decision on what to do.
Yeah. So when in doubt, maybe sit on your hands for a bit. Or, as you've also said before, just continue with the trend until it stops working. Right? If the market is not showing you any direction change, I mean, then you only have the point of interest that is telling you like, oh, be careful. Then you can be careful, or you can just continue to trade if there are opportunities that present themselves. All right. Well, as everything else is drawn, we can now start to move forward. So we see that it was taken out. This level was taken. So we have to wait. If we're going to go long, then this would be the check. So we could see on the 15 minutes, because we're trading 4 hour 15 minutes. So we can now, as it's now in a fair value gap and we are bullish, we can check and see if there is a opportunity. Well, it was fulfilled, so that's why it's not shown, but the shift is here. So let's see if we can get any thing above that. There is a 4 hour fair value gap filled on the other direction and immediately touched as well. But as we don't have any confirmation yet, I mean, technically, if you wanted to enter, you could enter on this one because this was the formation. So this is it. So technically, if you wanted to short, you could do it now. However, you'd be trading against the trend. So that's not generally a good idea, right?
Well, after the monthly sweep, you might want to look for some confirmations, like, okay, so maybe you want to, I don't know, like daily time frame, RSI or something. Yeah, good points. We don't have 4 hours shift yet. We have daily. Ooh, hello. That's kind of like an RSI divergence. Yeah, and also the candle, also with the rejection. Yeah. So yeah, I mean, it's really hard to decide because it is pretty important liquidity. So it's monthly liquidity. It's been taken since May. So it's like 6-month liquidity. And yeah, it's hard to predict. It is hard to predict, but as people may know from my streams, I'm kind of like a conservative trader. So in this case, I think I'm just gonna see and wait and see what happens, and try to see if we can get some kind of confirmation. Like, this is a strong reaction, and if I had taken this trade, I would have been taken out. So let's see what happens now, because now I think we have our 15-minute shift, although that was here, but this fair value gap was already filled and there was no strong reaction of this, so this cannot be taken. Okay, so now we get this retest of this fair value gap with more than half, and we get the reaction of it, but we have an entry only here if it comes to that. Yeah. And then we might not have a trade. But we can clearly see now, yeah, that this, it's even this fair value gap. We could still go long and see if there's any, if this was just the retest. Yeah, we'll see what the market says. I mean, it is going to be difficult because it's such a high shift. Like, the shift would be above this fair value gap. Yeah, and we get a new fair value gap, new bearish fair value gap. That with an entry opportunity maybe. But if those are the swings, then I would prefer to check with the Fibonacci. Yeah, it's in half. So technically,
technically, if I wanted to take it, I could. What to do? Because this on the 15 minutes is definitely a short. There are lower lows on swings, but not the shift. But this could be the impulse move, and this could be the correction move. So I think we have a confirmed
exactly.
correction
It's
move.
like it's really tricky position right now, because even if this is the reversal after the monthly sweep, you still can have some kind of a sweep of this high before going down.
Yeah.
Or you might not have it, but yeah, it is really tricky situation, because
but
like,
normally
usually you have to be aware of that.
Normally, if we see an impulse move followed by a first correction, and we see a confirmation of the correction, then I'm willing to risk a short in the opposite direction, as based on the order flow model. So that's what I'm going to be looking for. Call me crazy, but that's what I'm doing. This would be the highest point. So the shift would be on this point. Nice. Let's set the leverage to 10 and start our short position. This would be that one. That would be the stop loss. And let's see. Technically, I like this point a lot, which gives us only a 2. We're using 1% risk. So let's see if we can get a slightly better entry. I mean, yeah, this candle would be our 3. Yeah, that's fine. Okay, so we're taking the bottom of this candle. Let's see if we can get an entry there. And then we have a very conservative take profit right here. I mean, technically, if it does go, then aiming for the low point of the fair value gap is fine. However, like I said before, I'm kind of like a conservative trader, and it could be that you missed the trade. The question is, you could have made it.
That is the case.
Yeah. So this is also a learning moment, right? So we see here, this was the lowest point. If you had set it to the shift, you would have gotten it. But what did you need to target? So let's set it up. So maybe this is just a mistrade, but we learn from our mistrades. And we can see if there was anything here. Yeah, so the bottom of the fair value gap, or not even the bottom, like this one would have already been fine. So we can see if we would have made that. We still have our, but this one, we need to cancel it because it already, my invalidation for this is that it's already reached this point, so we're not going to enter again. So we'll look at the 4 hour to see if we get any new, there's our position. We would have made it.
Yeah, exactly the fulfill.
Yeah. Exactly the fulfill. We would have made it. There was no new fair value gap, so no new entry. Okay, that's unfortunate. But yeah, this would have been a beautiful trade if I had set it to that and aimed for something lower than this point, which was likely, but a little bit more risky. And that's why I didn't take it like that. But we can still log it as a mistrade. Okay, let's continue. See, okay, we got a retest of this fair value gap again. And a break. Okay. And we got a new fair value gap. I mean, right now, I would say we're pretty much in a bearish move. And yeah, let's see if we can.
Yeah.
If we can.
It's getting pretty bearish.
Yeah, it's getting pretty bearish. So let's see if we can continue with our bearish. Wow, what a move. Not even any entries. Okay, so wait, we got this liquidity taken now. We have this one that was almost. So I think the next move would be to this fair value gap, to this low point. So basically to the swing low of the market structure. The sell side liquidity, as we call that in technical terms. Oh, I missed. There was a fair value gap right here. And that's the beauty of backtesting. You are allowed to go back in time if and only if you've missed a potential entry in an area that you would have taken the position. But yeah, there it is. So there is the fair value gap. There is our entry, or there's the sweep, I should say. Shift would be technically below here. Let's see if we can get there. Yep, okay. So there, it is a high stop loss. That's gonna be kind of like a problem. Now I set the sell side liquidity as a next target. Oh, that gives us a nice 3.8. And that is because this is the 15-minute. We don't have the historic yet, so now we do. So yeah, we'll set it to this one. Hey, we already had that. Yeah. Zoom in a little bit. Let's see if we can get our fill at 395. We do. Let's see if we can get our target, or maybe even a double whammy. Oh, stop loss. Not so good. Is it ranging? This could be the correction to the upper side. Low point, shift nowhere near inside on the 4 hour. I mean, would this be an entry on this one?
Which one?
So from this point to there, that was a sweep.
I don't know. I wouldn't say that.
No, okay. I'm just grasping here because I couldn't re-enter based on this one because this fair value gap was on this candle. There's no new fair value gap here, so it could be the sweep of this one.
Well, yeah, I mean, as you remember the last stream, so regarding this fair value gap, so it appeared out of nowhere, so it's not a reaction to something. So if you had the price move like this, enter into the fair value gap, and then it created new fair value gap, then it made sense. But it just fair value gap, so it doesn't create any kind of imbalance on the market. So usually you want to take trades from the fair value gaps that are created as a reaction to some kind of other point of interest, or like taking liquidity or something else. But this one is just, it's just there.
it's just there. Yeah. So, okay, maybe this one's better then. Although, this might be a terrible thing because the shift would be here. I mean, in this case, are we prepared to do a fair value gap entry, which is be technically here? Let's see what the market does. Yeah, I think we might have to. Nope. We can jump back one candle. One candle. And then just lower the risk, because otherwise we might not get any opportunity. Let's reduce the risk like so. Was this the target? No, the target is here. That gives us a 2-4. Can we get, yeah, that's a 3. Okay, well, we already know that we might not get there, but we have to be fair. Okay, so we do get the entry. Nice. We do get our close here. So we do have the shift in place as well now. But yeah, this was already a stretch, so I don't think, I mean, technically if it comes back here, we could double our size, maybe. Because then the shift is in and you still...
Yeah, maybe. So what you can do is you can switch to like 1 hour or 4 hour time frame and see if there is anything, because on 15-minute there is just no entry, like no fair value gaps at all. So on 1 hour there is this fair value gap, you basically enter there. And what if you switch to 4 hour? Yeah, here you have the fair value gap as well.
Yeah.
Well, yeah, there like you already enter there, so I don't know.
So far, so good.
But yeah, based on the 1 hour time frame, we can say that it is bearish because you had the inversion of the fair value gap.
Okay, so we might get another bearish entry. Nope. We're moving the price along, hopefully getting... Yeah, this is difficult. This is one of those markets, again, that moves very quickly, sweeps it, and then goes. So we might get... That's not a close. That was a full fill of it. So we could technically find this. We could technically use this one as an entry. No. Ooh, but that's not a higher point.
Well, here you had the opportunity to open a position, I guess.
On this one, yeah, here, yeah, I agree. Let's move back because this was the higher point. So we can technically do it. And then this one and the short here on this one and on this one. 4 hour. So that's, yeah, it's kind of like what I hoped for. Like maybe we can re-enter, but now we can actually target this one and still have that. Plus we can increase our risk, giving us a better setup in this case. Ooh, that was close. Another fair value gap. On which candle is that? That was a fair value gap on this response. So technically it's allowed, but the shift would be here. Yeah. Okay, it's rejected. Whoa. So close. That would have been a nervous situation. Okay. Shift is, yeah, here. Basically, just have to drag this one down slightly. Okay. There's our shift. Are we going to go for 3 on the same target? I mean, technically we can, so we should, because we can. This is a really nice order flow if this works out. That would be the target. Is there any other target that we could say? No. Yeah, I mean, the bottom of the fair value gap, we could target that one for this one. I suppose. Yeah, that gives us a nice 3. Let's do that. Let's do that. And let's see if we can get past this. Don't you dare take my stop loss. Nice. That's one. That's one. So we have one close. That means technically we're already break even because this was the 1 and we have 1.5 open and we just made 3 at least. So nice. We should be. We are in the green. Oh, not too fast. I just want to get my profit now. Like, get it while it can. This was the formation of the fair value gap. Okay, so we get our entry. Entry in the fair value gap. We get a retest of the fair value gap. The shift would be at the lower candle right here.
But you're too close to the targets, I guess.
Yeah, but there's this target.
Well, yeah.
That's the bottom of the fair value gap. Oh, missed it by just a couple of pips. So that's invalidated, so we don't have to worry about that anymore. Can we? Yay, more profit. More profit. So we have one left open. And we're currently at 3.8%. Because this was a half one. But now we need to start to be careful again because we are lowering, or we are entering monthly fair value gap. What's this? Let's see, on the 4-hour daily fair value gap. Yeah.
Oh, yeah, there is the weekly as well.
Oh, I put this on the wrong level, by the way, because I should have targeted the daily fair value gap. Because the 4-hour fair value gap is kind of like far away. But we got our fill. Nice. 6.9%. 6.9%. Did we miss any? No, we didn't miss any. And okay, we now have a sweep of this fair value gap. A full fill. Hey, nice. We have an entry in our fair value gap. We have to check, was this formed? Because, yeah, kind of, right? It's the move after this one. Or, yeah. Or do you say that this is a thin air fair value gap? It just appeared.
It looks like too small. Yeah, I don't know. But, and also, there's no reaction to anything else before that. So I don't know.
Well, let's just see. I've taken them so far, so ooh. That would be the entry. But will we get there? And that's a 1.9.
Yeah, so you might also want to check the higher time frames again. It's like 2 weeks past since the beginning.
There's still this liquidity.
Daily fair gap fulfilled.
That is true. Daily fair value gap fulfilled. We didn't have anything on the weekly, I don't think. No, because then we're here. We're nearing the weekly fair value gap. But the daily one was fulfilled. Yes, that's true. Oh, the weekly as well. There was a weekly. Yeah. This one as well. Yeah. Okay, so we need to be careful. We need to be careful.
Yeah, it doesn't mean that it is reversing. But
yeah. But normally what we would draw is like a possibility that it goes there and then there, or obviously there's always the possibility that it goes there directly. Ooh. Oh, hello, wait. Yeah. So this is possible. So we need to be careful. Yeah. 4 hour 15. Okay. But then the target would be, that's what we were looking for. Target here, target TP on this level. That's not enough. Oh yeah, we were going for that one. Ooh, that's oh, why did I? Oh yeah, this was the shift. So technically we could target this one. Yeah, that's enough. Yeah, let's take it. Okay. Technically we can re-enter if it goes below this, but we do need to check, because if we see a recovery and it's going to go there, then we need to make, this was already kind of like a long move down. So a recovery might be imminent. A new high.
There is still no 4 hour shift. There might be like 1 hour shift within daily fair value gap and no 4 hour shift within weekly fair value gap.
Here, yeah, 1 hour shift. Yeah.
Yeah, but it might be not that significant. So it's, yeah, you need to decide.
Need to wait for some confirmation to see what's actually happening. Currently a little bit of sideways movement. No. Okay, so now we're taking that. Okay, that's good. This is nice. If we can get a quick dip in that one, and we can find an entry, that would be perfect. Okay, fulfill. Shift is on this fair value gap. Oof. It's a nice upward fair value gap as well. Just this, if you look at it like this, it's like, yeah, sweep here, reaction, forming a fair value gap. It could continue to go up, but and then it took out this one again. So decisions. But we're long term, we're still bearish. So we could look for that one, but it's a long way down. This was the top of the fair value gap. Oh, okay, we might get close. We might get close if we target this one. Yeah, that's fine. Okay. What? This sideways movement is so annoying. But luckily we have a 4 hour and we can see that we're going to get stopped out. Bam. Okay. But now we have a 4 hour shift, meaning that we could target this fair value gap now that we had somewhere. Did I not draw that down? So we have a 4 hour shift. So we need to be careful now. And we see that there's a nice fair value gap here. So we might be able to enter on that one. This one. Oh, it's already gone through, gone up, gone down. We'll see. Okay. There was no entry here anyway.
Yeah.
Because the shift would be here. And now the shift would be here. And we can still take it. Shift has gone down. No, okay. Is it now going to take my move? Did we miss a nice upward here? This one? Yeah, we missed it. Let's see.
It was a really hard, like in general, it is a really hard market.
Yeah, because this was the fair value gap. So technically here, we could have taken this, no entry, then yeah, this one here. So we missed a nice short that was here. And this would have been a valid short. Yeah. Unfortunate. We missed it. I'm not going to count it. But I am going to log it, right? Because we do need to learn from it. And I just went a little bit too fast. Maybe, and it's most likely that you would have had that reaction, right? Because you were just stopped out. Don't mind this floating candle. It's just that we didn't know the exact time when it was filled during the backtest. If you replay it and you play it on the 15-minute candle, it will be somewhere around here. Doesn't really matter. You would have been stopped out anyway. If you were stopped out here, then you always get a little bit like disappointed, and you lose a little bit of trust in the market, a little bit of trust in the strategy. At least that's how I feel. So I may have been like here, like a table flip moment, and forget about it and let's move on. We'll just give it a day's rest, and then you miss this trade. So it's good to, in these backtests, to still log them down and say, listen, you gave up, but you should have continued. And hopefully if you see that enough times, that you actually follow through the next time when this happens.
Yeah, well, also you had, like, so you mentioned the 4-hour shift there. So you were more on the bullish side. So that's why you missed it.
Yes, correct. I also wasn't checking for shorts anymore when it was still a valid short.
Yeah.
So again, my bias and my what should I call that? Fear or disappointment in the market. Yeah. This fair value gap was fulfilled, and it's not a shorting fair value gap. Let's look at the 4-hour, because where are we now? It's still that shift. So we could technically check for an entry. It's fine, which means that this would be the entry. However, saying that, this will be like some kind of ridiculous target that we need to do in order to get that. So we're pretty much halfway in. Is it going to reach this? Maybe, but then I'd still need to target it like here. Will I do that? That's the question. Let's look at the 4-hour. It's not really going like that. It's more like flattening out and yeah, no, I don't think that there's a trade here. It's just too risky at the moment. Like this target I would have taken, but then I would have been here. But if that happens after this candle, then there's also a high probability that it just goes down there. It's too far away from the actual shift. So I'm going to skip this one. There we might be better suited. Okay. No, these candles, they don't work for me. Although I might need to zoom out a bit and see, but yeah, no, I doubt it. Like again, it's the same situation. Like, what do I target? This one? Yeah, I would target that one. Looking at a 4 hours, and this is not even that crazy. Maybe I'm just too focused on the 15-minute. Because this is not even that bad. Nice. Yeah, there's actually a nice room to play with. Market can be a bit. Okay. Yeah. Okay. Okay. Oh. Wait a minute. This is the same situation. Don't get upset because you just got stopped out. Listen to the market. If the market moves, takes it out, it's still valid. Shift would be here. Okay, I like this reaction as well for the shift. Oh, this is the shift because it's a new high.
Yeah.
I like this move.
Is it the time for the all-in trade?
The all-in, the YOLO, the nice.
It's not that big one. Yeah.
Well, I mean, yeah. If you do it conservatively, then yeah. I mean, if you wanted to target the bottom of it, then this could be, yeah. Then it's even a split trade is crazy.
Yeah.
Yeah, but yeah. No, the target 1 is fine. Target 2, it's too much for me. My comfort cannot handle that. Yeah, you have to be mindful of that, of course. Like, you have to, like, this is I take these any day. I'd happily give up a 6 if I can just get a 3% in 2.5 hours. I'm happy with that. Like, I'm never going to be upset and say, oh, damn, I should have targeted the 6 and then wait 3 weeks to get that.
Oh, yeah. Let's just scroll forward.
I don't know if I want to, Roman. Oh, hey, we get another opportunity. We just missed that. No, stop. Ah, I don't want to see it. Jump back here. That play button is way too close. There. Short. On there. A nice, can we get a nice quick one? 2-7. 3-1. Yeah, it's fine. 1% risk, yeah. Okay. Come on. How close is this? This is crazy. That's crazy. So you were saying, like, you should wait, but we got our 6, but we got it several hours before that.
Yeah. It was pretty good.
We get the full fill. Okay, so we get the full fill. We need to be careful. We are entering another fair value gap. We get a new one. Yeah, okay. Well, this shift is horrendous. And nullified. Oh, this was also one of those fair value gaps that appeared out of nowhere, right?
Well, yeah, we can say that.
Yeah, I will say that. Okay, so we get that. However, where are we? Daily. No, we're nowhere near this one. And this is still that huge magnet. So I'm still thinking bearish. Daily still very bearish.
I wouldn't call this the magnet, to be honest. Like you can just see the difference in price. Like it is need like 50% drop to get there.
Yeah,
even more.
This is crypto. It's not Forex. Yeah. We don't look at the pips. We look at the markets, right? I mean, because this was also like 116 in 18 days. Well, sorry, let's take the correct candles. 27 days, 120%, 7. So 50% in a few weeks. Also not terribly impossible. Like we already did 50% in 21 days. Can it happen again? Sure.
Yeah, what I'm saying is that this was the biggest liquidation in crypto history.
Mm-hmm.
And this cannot be the magnet because it already took out a lot of liquidity. So it takes a lot of months and years to build up new liquidity here.
All right. But I mean, if we look at the market, this is still very bearish.
Yeah, that's true.
And we don't have a shift on 4 hours. Anyway. It just took out this fair value gap like it was nothing. Oh, so there might have been an entry. So let's go back, jump back here. Okay, there. Was that technically higher? High 303.19. Yep, technically higher. That gives us doesn't matter. It still gives us a better shift at this point. There. People finally gave up here. There. Ooh. What to target, what to target. I mean, you go to the 4 hour and you find your target. Yeah, if it goes down, then taking out this is definitely likely. And on the 4 hour, that's kind of like, yeah, I mean, there's this, but I don't know. No, let's go out with a bang or a stop loss. This will be the last trade anyway. It's gonna be a stop loss. No problem. No problemo. I mean, 9% in 26 days, 50% win rate. I call that pretty good.
That's not bad.
That's not bad, right?
But yeah, to be honest, it is really hard market to trade. When I was looking at it and preparing it before the backtest, I didn't expect this result.
Well, that's why you joined the live stream. So you can see the backtest hero going again. I mean, yeah, it's nice. I think we got that pretty well. I mean, we made a few mistakes. 10 positions, 50-50. We missed 2 profitable trades as well, which if we had taken those would have gotten us to 15 at least. So yeah, nice. Now, if you're wondering, how did I do all that? Well, that's what we explain in these live sessions. So if you want to see that again, then I would suggest you join us next week. But also we have the Academy. So go over to alltrade.com/academy and then click on the smart money concept, where we go over the strategy, all the technical terms, like what's fair value gaps, what's order blocks, what's market shifts, all that kind of stuff. Market structure, very important. Like, how do we know that this was going to be bearish? It's explained in the Academy part in the course. So yeah, if you're really serious about it, do check it out. And obviously sign up for Alltrady to get your free backtesting sessions. You can start for free. If you want to progress and actually invest a little bit, it's only 10 euros a month, or 100 and less. No, it's 80 something a year. Invest in your strategy by backtesting. And when the bull market returns, you'll be fully equipped, fully up to speed with the smart money concept, ready to attack the market and let your profits grow like they've never done before. That's my plan. Anyway, what's your plan, Roman?
Yeah, that's the same plan.
The same plan. Sounds good. All right. Well, then, on that note, I will invite you for tomorrow's webinar, where we're going to do scalping like we did last week. Not so successful last week. Kind of like terrible timing situation, because an hour later, the price actually hit the take profit that I needed to break even in that session, or at least to actually get a profit. Unfortunately, I had to leave, and I had to put in a stop loss that got hit as soon as I stepped in the car, which was very unfortunate. But that's what you get for trading within the hour, and you have to do it in that exact hour. You cannot choose the time. You have to sit down and trade. It's difficult, but it's fun to watch. So if you want to see that, come and join us tomorrow. It's 2 hours later than today. So, and if not, we'll see you again next week with another backtesting session. Thank you, Roman. Thank you, Soda. Thank you, Martin, Jungle. And we'll see you on the next video.
Thank you too. Goodbye.
Bye.